Welcome to Within the Frame, where we bring today's most pressing issues across the globe into focus. I'm Kim Mok-yeon. As we look back on 2024, it's clear that this year has been marked by a series of pivotal moments shaping the global economy. From ongoing geopolitical tensions to technological advancements and shipping trade policies, the world economy has navigated a complex landscape of recovery, challenges, and opportunities. Central banks, faced with inflationary pressures and political uncertainty, have made critical policy decisions, while technological innovations in AI and digital currencies are reshaping industries across borders. Meanwhile, in the U.S., the return of Donald Trump to the political stage has sparked new debates about trade policies, tariffs, and their potential global impact. For more on these key events and what they mean for the future, we invite Kim Mok-yeon, Associate Professor of Economics at Yonsei University. Welcome, Professor.
Thank you for having me.
And also joining us is Lee Hyun, Associate Professor at the KDI School of Public Policy Management. Great to have you, Professor Lee.
Pleasure to be here.
So, Professor Shim, let's start with your evaluation of how the global economic recovery fared in the year 2024. Were there any regions or industries that stood out in terms of growth or struggle?
Yeah, to answer your question, let me first point out some key statistics. So, according to the report by OECD, which was published at the beginning of this month, real global GDP is expected to grow by 3.2%, while that of OECD economies is expected to grow by 1.7% in this year. Global GDP growth rate is somewhat low when compared to 3.3% in the previous year and 3.6% in 2022, which are the figures from the IMF. But I have a little bit positive view on this measure because this is a figure achieved while the monetary policy was really tightened across the world between 2022 and 2023. It is a well-known fact that the effect of the monetary policy on the overall economy is not immediately observed, but the economy becomes sluggish after several quarters. Moreover, global uncertainty due to a lot of elections, including the re-election of Donald Trump, which raised uncertainties on the global economy in the upcoming years, also has some negative effects on the global economy. In that sense, I think that the global economic recovery was not that bad after all, while we are not sure if it is that sustainable. So in terms of a country that struggled during this year, I can think of Japan. Japan is expected to experience a negative growth in 2024 by OECD, whose growth rate is one of the lowest countries among all the OECD countries. Also, per capita GDP is catched up by Taiwan this year, which also shows that Japanese economy really struggles. Taiwan, on the contrary, is a country that stood out this year thanks to the increased demand for memory chips due to the development in AI industries and also the related industries. According to the Central Bank of Taiwan in December, real Taiwanese GDP is expected to grow by about 4% in this year, which is strikingly higher than about 1%, which was the growth rate in the previous year.
Okay, then what about for South Korea? Professor Lee, how did South Korea's economy perform in 2024 amidst global uncertainties and, of course, the ongoing domestic political challenges?
Yes, throughout this year, we have witnessed a fairly strong recovery in economic growth with inflation rates steadily declining. GDP growth in the first half of the year showed a robust recovery at 2.8%. However, as we moved into the third quarter, GDP growth slowed to 1.5%, primarily due to the slowdown in exports and less than expected recovery in domestic demand. And the rate of increase in both producer and consumer prices declined thanks to a decrease in international oil prices and lower demand. As of now, the Korean economy shows signs of limited improvement, with consumer sentiment dropping significantly due to ongoing political uncertainties. Additionally, the global trade situation following Trump's election victory has weighed down the Korean exports as expected shifts in trade policies of the US and potential tariffs could create further challenges. The political upheavals in December have caused significant volatility in the financial markets. The Korean won has depreciated sharply against the US dollar, reaching levels not seen since 2009. And the stock market has experienced a prolonged slump, hitting the lowest level since the COVID-19 crisis.
Right, so not a very good situation right now. Going back a month before, the Bank of Korea cut the benchmark interest rate by 0.25 percentage points in October, making a long-awaited policy pivot after more than 3 years. Professor Shim, how effective was it, and should we expect more cuts in the coming year?
Yes, the BOK cuts the interest rate in the two consecutive meetings. So I was sympathetic to their first rate cut in October, which seemed to be inevitable in some sense. But I thought the second interest rate cut was not necessary at that point because I thought there were still many threats on the Korean economy to lower the interest rate that quickly. According to the recent speech by the Fed Chair Jerome Powell, it seems that the Fed might not lower the interest rate further or even increase it, which actually gives more room for the BOK to wait more than to decide right now. Importantly, there is a huge uncertainty on the global economy in 2025 after Donald Trump goes back to the White House. For example, his trade policy might reignite the inflation rate in the very near future, because his policy can push the price back again, which can be another factor that pushes the interest rate up again. In addition, recent political event in South Korea, as is pointed out by the Professor Lee, also lowers the value of Korean won a lot, which cannot be sustained at the current level with a lower domestic interest rate compared to the US or the other advanced economies, because foreign and the domestic investors might sell Korean won further and take a flight to quality strategies.
So speaking of the value of Korean won, just hours ago, the South Korean currency dipped further against the US dollar to its lowest level in nearly 16 years amid a deepening political crisis and growth woes. Professor Lee, well, the Korean won fell to 1,471.81. Could you tell us about how the Korean currency fared over the year and which factors brought it to the latest dip?
Yeah, over the past year, Korean exchange rate has undergone significant fluctuations. In the first half of 2024, we observed an increase in the exchange rate, and this was mainly driven by the strong dollar amid concerns over the extended period of high interest rate policy in the US. However, since mid-August, the exchange rate fell to the low to mid 1,301 range, and this decline reflected the market's expectation of a US policy rate cut. But from the end of September, the Korean won has significantly depreciated again. And the key factors contributing to this depreciation include the weakened expectation of the US interest rate cuts, the strong dollar resulting from Trump trade policies, and the net selling of domestic stock by foreign investors. During December, the Korean won has been significantly impacted by the ongoing political turmoil, which has added to the existing pressures on the currency.
Right. And Professor Lee, supply chain disruptions have been also a major issue in Korea for the past few years. But have there been improvements in the year 2024? And what sectors saw the biggest recovery, or which are the ones that are still struggling with bottlenecks?
Actually, supply chain disruptions have become a major challenge for the global economy since the start of the COVID-19 pandemic. And factory shutdowns, particularly in Asia, and widespread lockdowns, mobility restrictions have resulted in disruptions across logistic networks, increases in shipping costs, and longer delivery times. Fortunately, these disruptions have eased as the world economy normalized from the pandemic shock. However, our focus has shifted towards new concerns. Geopolitical conflicts and extreme weather events have triggered energy and food crisis, and more critically, the intensification of protectionist policies could exacerbate global trade tensions and further disrupt supply chains. While the global economy has demonstrated resilience overall, this masks uneven performance across regions and industries and lingering fragilities. In response, firms and policymakers are exploring strategies to relocate production processes to politically aligned countries. And this aims to make supply chains less vulnerable to geopolitical tensions, of course. And such efforts are ongoing. And for Korea, the major sectors affected by the supply chain disruptions include both imports and export sectors. On the export side, semiconductors and automobiles, particularly batteries for electric vehicles, have been significantly impacted. On the import side, disruptions have been felt in chemical products, metals, machinery, and transport equipment.
All right. Now, let's also touch upon the return of Donald Trump to the office, as our Professor Shim mentioned a while ago. Professor, how likely is it that Trump's tariff strategy will push companies like Samsung, SK Hynix, and TSMC to shift production to the U.S.? And what kind of economic implications could this have for the global supply chain?
Well, let me first point out the overall effect of his trade policy because that is closely related to your question. As we have already experienced during his first term, Donald Trump is likely, his policy is likely to occur the trade war again because he is believed to increase the tariff rate on various products. In his recent talk, he again argued that he is a big believer in tariffs that cost Americans nothing. So what is expected is that he might impose some additional tariff on the products from China. Especially, he said that there would be an additional 10% tariff. And given that products exported by Samsung, SK Hynix, and TSMC are also related to the US trade balance, as well as the Chinese export, what is further expected is that he can also push such companies in the near future. In particular, these companies all operate foundry fabs or memory chip fabs in China, and such products can be restricted by the US or can be applied high tariff rates. So similar to the current Biden administration's reshoring policy to enforce memory chip companies to build new factories in the US, the new Trump administration will be likely to push further Samsung or SK Hynix to build more factories in the US. So this will surely affect the global supply chain because the production sites would also be relocated to the US and will have long-run effects on the US and also other countries. One possible relief on this situation is that both Samsung and Hynix can receive subsidies from the US government because they have already planned to build new factories in the US. But we need to wait more until the uncertainty that the President-elect Trump might repeal such a bill to pay subsidies because he does not seem to favor such a policy.
So we'll really have to see until he mentions about his policies on that. Now, several central banks around the world, including those of Japan, Taiwan, and Russia, have frozen rates despite economic challenges like inflation. Many of them mentioned the Trump factor in their monetary policy decisions. Professor Lee, how do you read into this, and what are the potential long-term consequences for economic growth and inflation?
Yeah, after price pressures dropped steeply last year, central banks in advanced economies began cutting interest rates from this summer. And as year end approaches, the future path of interest rate is becoming more uncertain. And the recent FOMC's dot plot of interest rate projections for 2025 showed fewer cuts than the forecast made before the US election. The Trump's election victory changes central banks' main considerations. His policy agenda, including tariffs on U.S. trade partners, slashing taxes and cutting immigration, is expected to bring inflationary pressures globally. And the potential long-term consequences of the implementation of such policies could be detrimental to the global economy. If geopolitical tensions continue to escalate, we could see a more fragmented global trade landscape, and this fragmentation could weaken the resilience of global supply chains, drive up funding costs, and disrupt cross-border capital flows, resulting in market inefficiency.
Now, in terms of technological advancements now, 2024 has been a pivotal year, of course, for AI, digital currencies, and automation. Professor Shim, how do you think these developments are reshaping global economic structures?
Yes, as you have pointed out, we have seen lots of development in new technologies related to AI, robots, and automation this year. So I think that this is well reflected by large increases in the operating profits for NVIDIA and SK Hynix because they produce memory chips that are crucial for running OpenAI, including ChatGPT. In particular, SK Hynix is expected to earn about $5 billion only in this quarter and is also expected to create yearly operating profits greater than Samsung memory sector for the first time. This already shows that the economic structure is now reshaping in a way to favor firms that produces items related to new technologies. Also, TSMC now takes about 65% of the market share in the global foundry market, while Samsung's share is now lower than 10%. Given that TSMC well advances the market more other firms in terms of quality in the foundry, it seems that it can lead the market more in the future because the markets for AI seem to grow further. Industries producing robots or automation are also expected to grow because labor costs have become higher in most of the countries and in most of the sectors. So automation can give more room for the firms to save production costs. So overall, transition from traditional industries to new industries that are closely related to AI technologies or automations or cryptocurrency seems to be inevitable. And a short suggestion would be that the government also needs to put more efforts to support firms to enter such industries. One concern at this point is that this is a critical moment to initiate more industrial policies to help the firms to enter such industries, but the political uncertainty does not seem to be easily blown up.
Right. Elaborating more on cryptocurrencies. Following Trump's election win, the price of Bitcoin reached an all-time high this year, and now still the price is fluctuating. How would you foresee the crypto market in the coming year, Professor Shim?
Yes, the crypto market has been really a bull market, especially after September, when the probability of Donald Trump to be elected as the US president was believed to be high. The president-elect and one of his main donors during the election period, Elon Musk, will lead the Department of Government Efficiency, emphasize the role of cryptocurrency. And so the election of him reignited the optimism of investors over the cryptocurrency market. In particular, price of Bitcoin was about $74,000 early November, but it is now about $95,000, which means that it has increased more than 28% for just 2 months. To me, this is really surprising. Even everybody knows that the cryptocurrency market is really volatile. If we look back, the price of Bitcoin in January makes us more surprising. The price of Bitcoin was about $40,000, which is much less than half of the current value. So considering the usual belief that the cryptocurrency does not have any fundamental value, but its price dynamics mainly depends on the belief of investors, the current state would continue for a while. unless until Donald Trump changes his stance on the cryptocurrency. At this point, I think it seems to we will see the bullish market further because the belief on the Bitcoin and the related currencies will be sustained by the new government in the US.
All right. Now, before we let you go, Professor Lee, what kind of strategies then should policymakers focus in on 2025 to ensure economic stability in South Korea?
Yes, the recent political instability has indeed added complexity for South Korea's economic policymakers. With domestic political uncertainty and a shifting trade landscape following the new U.S. administration, Korea may need to realign its policy priorities to navigate these challenges effectively. First, ensuring financial stability is the utmost priority given high uncertainty. The government needs to prepare contingency plans in case of additional possible escalation of market anxiety. Second, policies to manage business cycle fluctuations should be carefully calibrated. Given the looming near-term growth challenges, the central bank is likely to lower the policy rate. And automatic stabilizers should be allowed to operate, and additional targeted support should be provided to the vulnerables. Third, gradual fiscal consolidation should not be overlooked. To meet significant long-term spending pressures, such as declining labor force, fiscal buffers would be critical. During turbulent times, existing structural challenges are likely to re-emerge and become more prominent in the eyes of foreign investors. Therefore, to ensure financial stability and enhance economic resilience, the government policies must continue to focus on structural fiscal reforms. And lastly, it's crucial to address structural challenges that could hinder potential growth. This includes diversifying supply chains, as we have seen, as we have mentioned so far, and enhancing capital allocation to boost productivity and fostering innovation through the adoption of new technologies.
All right. Thank you for your clear and organized tips on that. Professor Shim and Professor Lee, thank you so much for your insights tonight. We'll have to leave our discussion here. We appreciate it.
Thank you.
And that'll be all from us on Within the Frame. Be sure to tune in again next time as we continue to explore the stories that matter. Until then, stay informed and engaged.